Imagine someone decides they will lose 20 kilos in 1 month. Is that realistic? Maybe the first week they feel motivated, but as soon as results don't appear, frustration kicks in and they quit. The same thing happens in trading. People set goals like, I will double my money every month. The result is frustration, overtrading, and losses. Setting realistic goals is as essential in trading as it is in fitness. Many traders begin their journey with the thought, I will become a millionaire in 6 months. Such goals lead them in the wrong direction. When the target isn't achieved in a day or a week, they start taking bigger risks. Over-leverage, revenge trading, and impulsive decisions wipe out their account. Unrealistic expectations are a psychological trap that always ends in disappointment and loss.
Over 93% of traders lose money in the markets, not because of the market, but because of their mindset. Hi, I'm GC Sharma, founder of Ghar Investor, former head of financial education at the National Stock Exchange. After 3 decades in the markets, I'm here to help you trade with discipline, not emotion. Welcome to Bounce Back Trader, India's free YouTube learning series for traders who want to bounce back with clarity and confidence.
A SEBI report, 2023, showed that 90% of traders remain in losses, and the major reason is unrealistic expectations. Another analysis revealed that traders who focused on 2 to 3% monthly returns survived long-term. Simple calculation. If you start with 2 lakh and make 3% monthly, in 1 year it becomes around 2.8 lakh. In 3 years, it nearly doubles. This may sound boring, but it's sustainable. On the other hand, traders who targeted 50% every month had an average survival time of just 6 to 8 months. An NSE hypothetical model also shows that if 1 lakh rupees compounds at 2% monthly, it becomes 2.6 lakh rupees in 5 years. But chasing 50% monthly targets with just 2 to 3 failures, the capital goes to zero. This contrast proves that realistic goals may look boring, but they create true wealth. The first driver is greed, the desire to make money quickly. The second is social media influence. Seeing someone on YouTube or Twitter making lakhs in a day inspires traders to set similar goals. The third is lack of planning. Traders ignore their own lifestyle, risk tolerance, and capital size. The fourth is copying, blindly following other traders' goals without customizing for themselves. All of this leads to unrealistic goals that push traders toward losses. Arjun decided he would turn 5 lakh into 50 lakh in 1 year. In the first 2 months, he made profits, but due to overconfidence and unrealistic targets, he lost everything in the next 4 months. Kavita, on the other hand, created SMART goals. Her target was to repay her car loan in 3 years through trading profits. She aimed for 2 to 3% monthly, managed her risk, and traded with discipline. The result? She cleared her car loan and doubled her trading capital. Another example is Rohit. He copied his friend's aggressive goals and had to leave the market within a year. But Neha set realistic goals according to her financial situation and managed to make a down payment for her dream house in 4 years through trading. Another story is Sanjay's, a salaried professional who chased jackpot-style goals, invested his savings, and lost it all in 8 months. In contrast, Meera set a smart goal for her retirement and within 7 years built a retirement corpus purely from disciplined trading. These real-life stories show that unrealistic goals are dreams, but realistic goals secure the future. Trading goals should be SMART, specific, measurable, achievable, relevant, time-bound. Example, in the next 12 months, I will achieve a 25% return on my capital is a SMART goal. It is specific, 25%, measurable, achievable, about 2% monthly, relevant, aligned with financial growth, and time-bound, 12 months. SMART goals give you clarity and protect you from impulsive decisions. You can customize your goals according to your capital, risk tolerance, and lifestyle. Another reframe is that trading goals should always align with wealth creation and learning, not just thrill-seeking. Friends, the lesson is this. In trading, realistic goals bring true growth. Unrealistic goals only bring losses and frustration. Action steps. 1. Write down your top 3 trading goals and convert them into SMART goals. 2. Review your goals every month and check if you are on a realistic track. 3. In your trading journal, note when you set unrealistic targets and what the outcome was. A reflection exercise. Write your dream goals and then rewrite them using SMART framework. Compare the gap between your dream and realistic goals. Motivational analogy. Trading is a marathon, not a sprint. If you make small progress daily, you reach the finish line. But if you sprint, you collapse midway. Reflection. Ask yourself, am I building wealth or chasing thrill? The next module will show you how a trade is designed and what the decision-making process looks like.
You've just completed another lesson of Bounce Back Trader. Remember, trade with discipline, not emotion. Subscribe to the channel, share your thoughts in the comments, and continue your journey in the next video. Let's change that 93% story.